All right, what's going on, guys? My name is Paul McMillan, and welcome to another live session. And it is November 29th, 2021, and it's on a Monday. So let's go ahead and check the news. So I'm going to go ahead and log in here. So as we can see with the news, London session is just about, the London session is done. So now the New York session has started. So during the London session, the JPY was the only currency under major news, and it's starting at 10 a.m. in the New York session. The USD and the CAD. It's going to be on the major news today. So, and then the CNY this evening in the Asia session. All right, so but we're going to be trading NAS100. So let's go ahead and get started. So of course, the first step is that we're going to actually mark up market structure from the 15-minute to the 4-hour. All right. So now we're all the way up until this point here. And then we're going to mark up market structure based off of institutional levels. And then we're going to draw supply demand zones off of those. Probably going to mark it up all the way up until this point here. Yeah, that's good. All right, so now what we're going to do is I'm going to draw my supply demand zones based off of these horizontal lines. And I like to fit it off of the body of the candle to the wick. All right, so what I'm going to go ahead and do is change the coordinates to these zones, and then we'll move on to the 30-minute. Be right back. All right, so we marked up everything on the 15-minute. So let's go on ahead to the 30. We're going to do the same old process. Same old process. So we're going to put a vertical line here. And we're going to take our horizontal lines once again. We can kind of do it that way. Next one will go here. Yep. Another one right up here. One up here. Right. So same old thing. We're going to draw supply demand zones. All right, so now what I'm going to do is actually change the coordinates to these, and then we'll move on to the 1 hour. Be right back. All right, so now we got these marked up. So now let's move on to the 1 hour. So we're going to move to here. Oops, I meant no, not lock that. I meant to select the, yeah, there we go. Make this red. All right. So then we're going to put supply demand zones. These horizontal lines. All right, so I'm going to go ahead and change the coordinates of these, then we'll move to the 4 hour. Be right back. All right, so we're done with the 1 hour. So let's go ahead and hit the 4 hour. So we marked up everything to this point. So now, of course, as we can see, price was overbought at this point. So we can say that they're definitely supply zone up here. Make it super thin like that. Then hold on for a minute. One there, one right here. All right, so now we did the 4 hour. So now that's done. Now it's time to go back to the 15-minute. There we go. You can see these zones interacting perfectly. Bam. All right. So now that's the first step. Second step is we're going to identify the trend. So as we can see, price actually did huge downtrend here, pulled back, downtrend here, and then did a reverse. Did an impulsive move to the upside, and it looks like it's pulling back and it's probably trending down again. So, I mean, we could probably jump to conclusion and say that price is trending down. So that's the first thing. Yeah, I could say that price is probably trending down. So for now, I'm gonna draw a trend line and just say that price is trending downward. Now, the very next thing that I like to do to identify to identify the trend as well, for sure, is to turn on my higher high and lower low strategy, because in order for me to know to know 100% which way price is going to go next, I want to identify break and retest. So what I do is I find the most nearest high, which is here, and the most nearest low. And the reason why I draw these up is because once price is ready to go, I want to identify break and retest. So that way, when price breaks and retests one of these horizontal lines, then I know for sure which way price is going to go. Then that'll give me a clear decision on whether to buy or sell. So it's just another way for me to, get confirmation. Okay. So that's the very next thing. So which way is it going to break? Is it going to break above here and go up to the next zone, fill in these imbalances, or is it going to break here and fill this imbalance here? It's $1 million question. So that's why I draw these lines up. So now that we've done that, then the next thing I like to do is locate Harami candles, the Harami candles, and locate institutional imbalances. So I could see that there was a Harami candle here. So a Harami candle basically signifies reverses in the market, a huge reverse in the market, and is sometimes a sign that price is going to do a very huge impulsive move on that reverse. So for example, we could see here that price did an imbalance move down to here, and then reverse did a Harami candle and went up majorly up all the way up here, which in this case, the institutional was actually mitigating this area, which is where another Harami was formed here. Okay. So you can see they came up and mitigated this area off of this imbalance. And then there was a Harami candle that does that. So I'm thinking more likely they're probably going to try to come down and mitigate either 50% in this area of the whole thing, since there was a Harami here, because there's a lot of imbalance that they have. They fill some of the imbalance here, but there's a lot here that they have to fill as well. So they might just come down and mitigate this area, but we'll know for sure soon at the 9:30 bell. So, and like I mentioned before, when we locate the imbalances, so price cause the imbalance here, they still have to fill all this area in here. Now, when this candle created this imbalance, they did bring it back to mitigate this area. So I'm thinking they're probably going to come down and mitigate this area, and then maybe drive price to be oversold, and then ultimately create an all-time high to fill all the imbalance that is created here, because there's still a lot of buy orders that were left over in this area that they haven't came to mitigate yet. So we'll see. So So I'm going to turn on my order block indicator. So we see all this imbalance in this area, especially down to here. So I'm going to mark that. We'll make that as a take profit area. It price the size of sell. I'm going to actually move this up to here, this zone. Matter of fact, I'll draw another one. All right, so now this caused a lot of imbalance in this area too, and some up here. So I like to use the imbalances as take profit zones, because price has to fill in those areas, whether it buys or sell. So I'm going to just, put a take profit zone here and then one here. So maybe even one right up to here. Yeah. So then the next thing I like to do is plan my trades. So I like to do that with by placing my risk to reward tools and then turn on my Dorlean EMA indicator and basically just waiting for price to go the direction that I think it's going to go. Basically just waiting for price to strike whether it's going to buy or sell. So I'm thinking that it's a possibility. Now I'm just going to tell you guys what I think is going to happen, probably going to happen, but it could go either way. Price actually did trend down at this point, but it's a possibility I think price could be trending up at this point too as well, because there was a reverse here. So I'm going to actually just draw an up trend line like this instead, now that I really look at it. But price reversed here. So I'm thinking that price probably might push up and actually fill up in these imbalances and then eventually come down to here maybe. But we'll know for sure at 9:30. So with that being said, so I'm going to set up my risk to reward tools. And this is going to be entry here, stop loss here. We get at least 200 pips on NAS, at least. So this is at least 490 pips. That's more than enough. And then we can make this the second take profit if price decides to go up and hit that. That is a lot of pips. 1,500. Right. So here, yep. So we could say 490 plus, but we could say 400 and 400 plus for this one. And then up here, 1,500. All right. So that's going to be if price decides to buy. Now, if price decides to sell, then we're going to do it like this. So I want to bring it over here. Actually, it's the wrong one. It's supposed to be a short position. All right. So I'll probably make this just the first take profit. This is going to be, you know, 700 plus pips, even though I don't need that much. And then down here, we can make it take profit too. So this is going to be 100 plus pips. All right. So this is going to be for the sell. And of course, the reason why I set these as well is because I can click on either one of these and be able to put in my stop loss and take profit easy. Because it's right there. So I got it set for depending on which way it goes. So then that's when I do my final, well, not final step, but my final step in planning my trade is turn on the Dorlean EMA. Now I use this as extra confirmation after, you know, I do my normal market structure and analysis and my institutional imbalance analysis. And so whenever the yellow EMA crosses the red EMA and it lines up with my market analysis and my market structure and imbalances, then that gives me an indication that this is the right time to go in for a buy or sell. So when I zoom in, let me zoom in a little bit here. So when I kind of zoom in, I see that there was a cross here. Then there was a cross here, but it's consolidation. So it may be, you know, it may be a sign that, you know, price is probably ready to trend on up. Might be a sign for that. So we'll see. Price already trended once, came back and mitigated 50% in this area. They may be ready just to buy it up, but we'll see. So we're going to wait for the 9:30 bell. That's within an hour. And we're going to see which way price goes. And then we're going to jump on that. And then we're going to make our decision then. All right. So once price get close to 9:30, I'll kind of make my decision on which way it's probably going to go. And then we'll take it from there. So be right back. All right. So it's 9:15. We have 15 minutes left. We'll see. We'll see. So almost time is 9:23. It's that doji. Wonder they're gonna mitigate this area and then shoot that thing up. We'll see. We'll see at 9:30. So the like price is trying to buy up. Let's see. Hope I didn't get in too early. I did push past this high, but see now it's kind of pushing down. Maybe waiting. Get myself in trouble. See again. Here I go. Get myself in trouble. Let me pause this recording. So it might be going up now finally.
Are you in the trade?
Yeah, I've been in the trade.
How you looking?
We'll see.
What's your lot size?
Smallest one.
Hey, you mind making your candles a little bit bigger?
I could, but it might mess up my screen. Let me see. Let me see if I could profit first.
Okay.
Uh-oh, he's about to get it. Uh-oh, big dog. Uh-oh, big dog. Uh-oh, big dog.
Dang, I did it too quick. Oh, no, it was 15.
Oh,
Okay,
you
good.
got it, big dog. Look at that. Ooh,
All right, that's
I
good.
like that.
Nice
I
job.
like that.
Appreciate it.
Yeah. That's
Yeah, what
what
it's
I'm
supposed to do,
talking
didn't
about.
let me down. Yeah, it's
Man.
suckering up now.
See, that's that good analyzation, man.
Yep. So we won this trade. Go ahead and snapshot, then I'm gonna stop this recording before my computer decides to be a hater. Just do this real quick here. All right, I got it. So we won this trade and it's still going up. So we did it. I might do a back testing session on this later. So I'm gonna go ahead and end this session, this recording.
Man, don't that make y'all sick?
Say it again.
Don't that make y'all sick when y'all in the trade, but that thing keep going the same direction that you wanted it to go?
Yep. It's pushing up. I'm loving it.
Yeah, exactly.
All right, well, I'm gonna stop the recording.